Good evening, everyone. Hi, I'm Shalini Kemker. I'm the founder of E2E. I'm the chief executive of E2E for those of you that don't know me. I'd like to thank you all. It's a lovely evening in London. I don't know what it's like around the world. I know we've got quite a few people from different parts of the world today. So welcome. I'm welcoming you to our virtual reception. If COVID wasn't around, we were going to be having a really smart dinner with Jim. But instead, we're doing it this way. But the comfort is, the upside is that we have the comfort of being in our own homes. So I hope you've got a cocktail or a glass of wine with you, and we'll be here for until 7:15. So first of all, I'd like to say a huge thank you to IWG PLC. They are our partner for serviced offices. They're the largest company in the UK for service offices and virtual packages. And a huge thank you to this gentleman, hopefully that you can see him alongside me. For those of you who don't know him, he is Jim McColl OBE. He's very famous around the world now for his services to engineering and business altogether. He was, and I'll introduce him more formally in a minute, he is one of the top businessmen from Scotland, but also internationally. So quickly, in terms of the format, what we're going to do is, unfortunately, Richard Morris, who's the Chief Executive of IWG, he couldn't join us. So I'm going to tell you a little bit about E2E. I will also tell you a little bit about IWG, and then I'll have the huge pleasure of introducing Jim. And after that, we will go into, we'd like to make this quite interactive. So we go into a Q&A. So what I'd like you to do, hopefully you can see at the bottom of your Zoom screens a way to raise your hand. You'll see it in the chat function. So start thinking about your questions. So that's going to be interactive. So I'll speak for about 5-10 minutes. And Jim, you kindly agreed to speak for about 20 minutes. He's going to talk a little bit about his business and the challenges and how he's overcoming them at the moment during this COVID time. So hopefully that's a format that works for you. So in terms of E2E and what we're doing, I think right now we're all going through, a lot of our members, we have about 23,000 members. We're going through quite a difficult time. And we strongly believe that it's through camaraderie, it's through collaboration, and it's through making a concerted effort to keep our businesses alive and to network and connect with people, albeit through Zoom or the other technologies, but to stay connected. So what I'd like to say is that if after this webinar you'd like to connect with other people within the E2E community, just drop any of my team a line and we will facilitate those introductions. So you'll hear people speaking during the interaction. So we've got about 150 people registered for today. Many are members, some are not. But let me just give you very briefly the background on E2E. I founded it in 2011, so we've been in operation now for about 9 years. We have, as I mentioned before, 23,000 members. They contribute £213 billion to the UK economy. They employ 1.5 million people. Since March, we've been inundated with, I guess, inquiries and requests for support. So I've had the opportunity to work on something called a Business Action Council. This was being set up by the government, and it's a consortium of all of the large networks in the UK. So part of the work that we've been doing, and I hope that for those of you that have needed it, you've been able to access CBILS. We played a strong role in influencing the bounce back loan. So the bounce back loan is still around for a little while yet. So if you haven't accessed it, it's £50,000. The money is into your account within 48 hours. You need to have a company that's registered in the UK and is performing in the UK and a bank account in the UK to access that. I've also been leading the government's subcommittee on the employee retention scheme. So I just wanted to mention about the flexi furlough. That was a result of the work that my subcommittee and I put forward to Alok Sharma. So flexi furlough was introduced in July. It continues till the end of October. We have put in a second policy paper to ask the government really to look at tapering upside, so that should you be thinking of making any of your team redundant, you don't do that, and it's supported by the government. So if you want to know more about that, please just drop me a line and we will let you know what happens on that. Hopefully you've seen some of our videos. I think John McGlynn might be on the call. He spoke, he did something called the Business Unusual video. We've done a series of these, and if you haven't had a chance to watch them, they're on YouTube. Now, as many of you know, our membership is complimentary, there is no fee, and that stays in place for now. If you look at our membership benefits, there's around £12,000 worth of membership benefits for complimentary membership. Soon we'll be launching our digital portal. On the digital portal, you'll be able to access roughly £24,000 of membership. I won't run through all of those things, but just to highlight a few things, you get free access to the CBI, get £10,000 worth of CRM support, £1,000 worth of web hosting support, and so on and so forth. I think the thing I'd like to just focus on a little bit, because Richard isn't with us, is to talk about a collaboration with IWG. Many of you will know we've had it in place for quite a number of years, but they've continuously increased the offer to our members. So if you are a member, if you're looking for any flexible office space, you're looking for the virtual offices or a physical office space, the contract with us is that you have 3 months free on a 6-month contract. In addition to that, you have unlimited access for 6 months to any of the business lounges in the UK. They're offering 10% discount on offices, so a lot of people are working from home but need somewhere to go for a meeting. So if you need that, just talk to us for the 10% discount on offices, which is basically you can book an office for a day or by the hour. IWG, they've got 2.5 million people who use their workspace. They're in over 3,300 locations in 110 countries, and they have an extensive coverage, as most of you hopefully know, in the UK and in Scotland. Last year, Jim kindly spoke for us, and we had about 150 people physically in a room in Edinburgh. So Jim, thank you very much for coming back and doing this virtually for us. So in a nutshell, think of E2E as a match.com for business. That's the easiest way to describe us. So if you don't remember anything I said, we're a connector, and we look forward to building on that and supporting our members. So I'd like to just spend a couple of minutes to tell you a little bit about Jim. I have to say he's become a great friend. He mentored me when I first started E2E in 2011 because he was heavily involved in the entrepreneurial exchange in Scotland, and I loved what they did, so I decided to put together this organisation, and I was fortunate enough to have some time with you, Jim, so thank you for that support. I couldn't have really built this without the input of a lot of our members who are from Scotland who helped me. So Jim McColl is the Chief Executive and the Chairman of Clyde Blowers, Capital One. It's one of Scotland's leading entrepreneurs. He's been one of the leading entrepreneurs, as I said earlier, for almost 25 years. Don't look old enough, having done that for 25 years. He's presided over a significant turnaround in the fortunes of the engineering sector in Scotland and throughout the UK. He's breathed new life into the industry, having risen from an engineering apprentice to the head of a global Scottish engineering business. In 1992, Jim bought 29.9% of a small Scottish engineering company, which was Clyde Blowers. He's converted that into a fully listed Clyde Blowers PLC and listed it on the London Stock Exchange. Today, Clyde Blowers has become one of the most foremost European engineering industrial investors. So he has a significant investment arm with Clyde Blowers, which he's going to talk about. So I've just touched on some of the highlights of his career. I know he loves cars, he likes jets and planes, so he lives in Monaco. He's over in Scotland right now. So thank you very much, Jim, I know how busy you've been, and it's been a difficult time, so thank you very much for doing this today, and I'll hand over to you if I may.
Thanks, Shalini, for the introduction. Maybe I'll just give a bit of background before I get into Clyde Blowers in 1992. As you said, I served an engineering apprenticeship, and after 6 years decided to go to university. I did a first degree in technology and business studies, an MBA, and then a master's in international and finance. Now, I worked in engineering, various engineering jobs in junior management, senior management, and then was headhunted by Coopers and Lybrand to go into what they called corporate care. That would be around the mid-80s. Now, that was a very good move for me because it introduced me to a lot of different companies that were in trouble, to try and apply the skills that I'd learned, both through practical involvement in the past and also my academic input. It made me realise that I wanted to buy into a business of my own, but I didn't have any capital, and I had to come up with a way to raise the capital. So after working for Coopers & Lybrand for a few years, I decided to become a self-employed company doctor, go into businesses that were in trouble, turn them around, and my model was that I would take a small fee for that, just enough to keep me fed and watered and with a roof over my head. But I wanted a share of the upside. That was the way I could see myself building capital to buy into a business of my own. Now, I was able to do that with a number of very successful turnarounds. And the last one I did, they had to buy me out of the upside agreement because the company was doing so well. That allowed me to raise the capital to buy 29.9% of Clyde blowers. So, you know, it was probably a 5 or 6 year period, you know, from when I joined Coopers & Lybrand until I got to the point where I had sufficient capital to buy into the company. Now, it was the smallest of 8 in the world that did what it did. It supplied equipment to coal-fired power plants throughout the world. But it was the smallest of 8 at a 3% share of the world market. It's probably the oldest technology of any of the businesses, and the oldest workforce. I bought the shares from the chairman and chief executive, who was 87 and still running the company on a daily basis. The chief engineer was 82, and that was the kind of profile of the people in the business. It was like stepping back in time, going into it. But there was something about the company that I thought would form the basis of you know, a platform to build on. Between 1992 and 1997, I managed to acquire 6 of the other 7 competitors that we had. So we moved in 5 years from being the smallest in the world market in a very niche area. You know, it was in equipment that improved the efficiency and reduced emissions from coal-fired power plants. But we went from 3% share of the world market to 60%, and having 7 competitors to having 1 competitor. And that kind of consolidated the industry sector there. So we had to come up with a new model to continue growth, because we didn't think it was a good idea to get rid of the 1 competitor. It's quite healthy to have someone in there. We weren't going to compete with them on price or try and put them out of business. We were happy to coexist as long as we had the majority market share. So we had to look at complementary products and services that would serve the customers that we had. That was the model we had for growth. So we looked at coal-fired power plants and the equipment around what we termed orphan technologies, orphan equipment, where it wasn't the big pieces of kit like the turbine or the generator or the boiler. There were very big companies in that, and it was very capital intensive. But there's a lot of equipment around that that's needed to keep these plants running. And that's where we focused for the next phase of our growth, which took us from 97 through to 2001. And we built up with material handling equipment, sensors, pumps, valves, a lot of servicing around the power plant. And we're able to grow the company significantly. But in 2001, in 99, we did take the company off the market. We had put it on the stock market as a means of raising further capital to help us with our growth. But in 98, 99, we had a downturn, and we've been through a few since then. But in 98, it was a Southeast Asian financial crisis, and small companies in the stock market saw their share prices dropping quite significantly. We saw ours dropping by 75%, and this was against the background of the company continuing to grow quite strongly, at least 30% a year on the bottom line. The company was doing very well, but for no apparent reason to me at the time, our share price had just been significantly devalued. Now that was a huge blow. It's a huge blow to your ego when you look at it. You think you're worth a certain amount of money one day, and then a few days later, you're worth a quarter of that. It wasn't logical. I was taught in my Masters in Accounting and International Finance about efficient market theory. And it was clear that the markets weren't operating efficiently. And, I used to believe wholeheartedly in my professor at the time, Simon Keen was his name. He wrote a book about efficient market theory. And, this was my first shock that the market doesn't always reflect the real value of the business. The people have traded in this for a while. Warren Buffett built Berkshire Hathaway in this, looking at undervalued assets. So we looked at it and at first decided, look, we just get the head down, it'll come back. But it became clear to me that that was not the right approach, the right strategy, because one of our customers called me up, a big customer about to place a new order, and from New York, and said, look, someone knows something that I don't know. Look at your share price, it's dropped quite a bit, there's clearly a problem there. So I got on a plane and went over to see him to explain that there was nothing wrong. I shared the financials, our information with them, and I got the order. And a second incident happened where one of my senior colleagues was being approached by a headhunter to say, look, your share options are out of the money. We can offer you a job with this company and you'll get good share options and it might be more attractive for you. So, at that time I thought, this was a customer that had approached me, and I was able to save the order. Are there other customers with the same perspective, and are they just acting without coming back to me? And I could lose good people, so we have to do something. And that's when I decided that we would take the company private and take it off the market. So I did that with some support from a private equity firm at the time. It was 3i. I did say to them at the time, look, I don't want you in here long term, 2 years max, and I'll buy you out within 2 years. And we agreed that with hurdle returns, as long as we got over a certain return, they would agree to sell. And we were able to do that. We were able to take the company private. We had to offer, at that time, and it might still be, a record premium to the then market price. And it was difficult trying to get 3i on board with that price, because the usual approach is, well, we'll maybe do a slight premium to take it off the market. There'll be a benchmark 20% or something, but we paid 60% premium to take the company off the market, and that was already significantly below the value that it had been before the downturn. And with hindsight, with what happened after that, it was even undervalued before the share price had gone down. So, we took it private in 98, 99, and through to 2001, 2002, we were splitting the company up, because we had added complementary products and services in the coal-fired area. Some of those complementary products and services were applicable to other industry sectors. So we split the company up into at first 2 separate businesses and then 3. And that was the start of us running our own portfolio of businesses. And from then up until after we'd taken 3i out in 2001, I think it was, we were investing our own money and doing deals on a deal-by-deal basis and having co-investors in alongside us. And we made very good returns on that model. And in 2007 decided that we would expand that into a fund structure, a private equity fund structure. And the reason for doing that is we did need access to more capital to continue growing businesses. And we felt that we were constrained in the number of businesses that we could be involved in our portfolio because we had different co-investors in each business. Each one wanted 100% of our time, or the majority of our time, focused on their business, which you can understand. But we managed to get up to a maximum of 3 with different co-investors in each one. And beyond that, you know, it's clear that you're not devoting the majority of your time to any one business. And that's when we decided that the model of a fund would be more appropriate, where all investors were aligned and were invested in each of the businesses. So we did raise a fund in 2000. Well, we started in 2007. Our last investment as a team of 4 was in 2007, where I bought into the business that I'd served my apprenticeship in. We bought that. We then warehoused that to put into a fund in 2008, and we raised a £250 million fund. And of course, in 2008, we saw the next downturn, the financial crisis again, which was a tough one, because we had just closed our fund 3 days before Lehman Brothers collapsed, and we had also made a major acquisition of a Fortune 500, a division of a Fortune 500 company in the US. And we had 4 different banks in helping us with that. And of course, immediately when we had the banking crisis, they were all trying to get out of the deal. However, we had in place a concept called certain funding. So the banks had to guarantee that they would follow through in the funding. It was guaranteed. They couldn't back out. But that made the first year or so after that pretty tough, because we were under pressure. We were breaching covenants, and each time we breached it, the bank would charge us quite a bit of money for, you know, a review, and then the rates would go up, the interest rates, there would be a fee. So that was a tough period. And also, I suppose, our investors at that time were having problems with a lot of their investments, writing them down. So we did push on with the 4 or 5 portfolio companies we had, and by 2011 we were able to return the original 250 million to our investors. That was over a very tough period where all other companies that we were competing against in most of the sectors were marking their businesses down, paying people off. So it was seen in the market as a very good performance, because they all had got their principal back by 2011, and that was a tough period for everyone. And through that we were into these the banks putting in one of the big four accountancy firms when you breach your covenants, and the focus was always on what else could go wrong. I had a report on our pump business, which we had bought in 2007 and put into the portfolio, which if we'd allowed it to go through, the bank would have closed us down. And that's a business where we invested 45 million in 2007. We invested another 45 from the fund in 2008, and we sold that business for 500 million in 2011. It was almost 5 times our investment. We had some debt in there, but it was almost 5 times what we invested in the business. And in 2009, the banks could have closed that down if we hadn't been absolutely robust in fighting against the report that had been done by one of the accountancy firms. We rewrote the report. We said we weren't accepting it. We were quite belligerent about it. We had to pay a lot of money to the banks in terms of fees and so on. But eventually they accepted our position. And when we did sell that business in 2011, we calculated the return that the banks made, and they made 21% IRR, which is criminal. And that was because of the additional fees, the increase in interest rates. And we were lucky. Many companies through that period were absolutely destroyed by the action of the banks. So that was another tough period for us, the second sort of downturn. And we're now on to our third downturn with what's happened with the coronavirus. Now we're also in some of the sectors we were in oil and gas. That was one of the sectors that we were still quite keen on as a firm, and also the energy sector. We had moved out of coal because it became clear to anyone that there was no future in coal. So we were able to, we eventually got our share in our coal-fired power plants business down to 3%. We were still managing it, but we had other investors in there who were taking it over, and it was eventually sold off completely. And we were moving away from that into oil field services, and mining was a key area as well. And we started to get into renewable energy. So we had to kind of move away from that. But then we had the oil kind of downturn again with the fight between Saudis and America and Russia. So we're still suffering in the oil sector from the downturn, and it's very difficult with the coronavirus issues on top of that to, with any certainty or any degree of certainty, predict what's going to happen in the future. I think it's a difficult period for businesses in oil services sector, but we have switched our focus into renewables and then a sector that we really like. A strategy that we have just now is in energy transition, an area that we've been quite focused on and have quite a good pipeline of businesses in, is energy transition sector. Now that's moving away from fossil fuel to renewable energies. And an area that we are keen on and like just now is hydrogen. We think the hydrogen is going to be one of the key fuels of the future. Wind has grown strongly, as has solar, and we've had businesses in the wind sector and in solar. We supplied equipment to one of the biggest solar farms in the US, in the Mojave Desert, where It was on a solar boiler on a tower with 110 mirrors pointing up to it to reflect the sunlight onto the boiler. So it wasn't photovoltaic. Now we supplied sensors to that, and a mechanism, robotic mechanism, to move the mirrors every 10 seconds because the sun was moving, and that was around 110,000 mirrors. So it was a big project for us in solar, and we managed to sell that business a few years ago for a good return as well. But that was more into robotic type mechanisms and sensors. And that's an area that we are interested in transitioning into now, is more robotics, artificial intelligence and sensing technology. But also in the energy transition side, the move away to clean fuels and looking at how do you do energy conversion and storage. We're getting a lot of wind energy produced now and solar, but one of the challenges there is that when the wind's not blowing and you don't have any power, or if it's blowing and you don't have the demand, what do you do with the surplus power? And at the moment, the utilities have to pay, are being paid to shut down wind turbines. Now, there's a way to use that and convert the energy into some storage system, into energy storage to be used later. And two ways of doing it is batteries. So you can do it through having big battery storage, and there's a wind farm not far from where I'm sitting just now, where they've invested or are investing over $1 billion in battery technology as a storage medium for the surplus energy from the wind turbines when the demand falls. That then allows them to supply the energy when we're back at higher tariffs and when the demand is there. But another way of doing this is through hydrogen production. So you can produce hydrogen through electrolysis, store the hydrogen, and then use it as a fuel. It can be used in the way that gas is used. It can be used in gas pipelines, or you can use it through a fuel cell to power to produce electricity. So that we're making those kind of moves. We've also downsized the company a bit. We did this on our Fund 3. It's in its final year, and we had a separation of the management of that fund, the tail end of that fund, from our investment, and we are moving on to looking at some new investments and a new fund, an energy transmission fund, and quite keen on artificial intelligence, sensing technology, data analytics, and that's the kind of move we're making. We haven't furloughed anyone, we haven't laid anyone off, only had this mutual agreement to split some of the senior team away to continue with the new manager of the tail end of our fund as we look to raising a new fund. We still have an investment in the businesses that we transferred, but our real focus just now is on a new one. Now, very quickly, because I know I'm kind of out of time, but another project we've been working on, I suppose for the past 2 or 3 years, is the establishment of a new challenger bank, and we have gone through all of the steps required by the PRA and the Bank of England and applied for our banking license in December. And we're currently at the stage where we expect to be asked to or awarded a license and be able to call it a bank in the final quarter of this year. We're just in the stages of raising the mobilisation capital for that, and hopefully this will be of great assistance to SMEs who are not really being served just now. I mean, 73% of SMEs just now have no contact with a relationship manager. And our idea for our bank is to be able to use new fintech systems to alongside relationship management. That's the bit that's disappeared from banking. People are not, the SMEs are not getting to speak to a human being for some borrowings, and it's an algorithm that's deciding whether they get a loan or not. And we're very focused. Instead of just looking at the collateral they've got, we talk about the 4 C's, which is collateral, capital, what capital have the individuals who are running the business put into it, the cash flow profile of the business, and very importantly, the character of the individuals running the businesses. Those are all not taken into account just now, and we believe there's a big opportunity there going forward. I don't have any more time to talk about that. I would love to have talked for another half hour about the bank, because I think it's a huge gap in the market, but Shalini and I are talking about that and how it might be able to help the E2E investors and members rather, and hopefully you'll be hearing some more about it in the future. So I'll stop there, Shalini, and you can move on to the next.
Thank you. I think there's a word that comes to mind for me when you speak, is industrious. You do everything with industrials, but you are super industrious. I think if we had another half an hour, you would be talking about your other projects. And in terms of launching, are you still calling it Alba Bank?
Yes. Yes.
In terms of, we would love to work with you, and I think this is the time, because so many of our members have struggled with access to finance, that if they had a stronger relationship with their banks, that finance would have come quickly, and it could have been game-changing for some of the companies that are within the E2E community. So I wish you every success with that, and I would be very keen for E2E to open that up to our community as well. So Jim, you've been massively insightful. There's a lot of friends on the webinar today, so I'm going to take up less time, and I'm going to ask them to ask you some questions. And there's questions coming through on the Q&A. So guys, what I would suggest is please just raise your hand in the chat function. But I'm going to kick off with Robert Kilgour, and then I'm going to ask my friend Tony Banks to ask you a few things. And then Ron, I don't know if you've got questions as well. Ron Lander, he's set up the Entrepreneurial Exchange in Scotland. He's on the call as well. So maybe I could, Stephen, if you could make Robert live so Robert can ask his question, please. You won't be able to see Robert, but you'll be able to hear him.
Can you hear me?
Oh, I can see you as well. Well, I've got a picture of you as well.
You're looking well, young
Before you
man.
say anything, Robert, I'm going to say thank you to you. So Robert is massively supportive of E2E. He sits on our advisory board. It's great to have you on the call, Robert.
No, it's great to be here, and it's good to see you, young man. Good to see you in good voice, as usual. I'm very excited about your bank. I agree with you. SMEs have been badly served, and the Higgins report in 77 pages mentioned SMEs once. And if we're to have an engine for growth to recover from COVID, it has to be SMEs, and the government don't seem to accept that. With that in mind, and the threat of perhaps another independence referendum, I just wondered, with you setting up the bank and SMEs and the engine of growth, etc., whether you think that another independence referendum, and in fact independence, if it did come about, whether in your view that would be good for Scottish jobs, good for Scottish investment going forward, particularly with you setting up this bank.
No, I don't think it would be helpful just now. I think we do need the power of the UK. We need to all be working together here to support business and private business, because there are many people in politics who don't realise that where the money comes from. The way you're going to create jobs and grow the economy back is by supporting business. And as you said, Robert, I think it's something like 99% of the businesses in the UK are SMEs.
Yeah.
Yes, that's right.
So it's a huge driver for the economy, and it's an area that really needs a lot of focus. And I just don't think that by restricting our access to solutions to help them is and the resources that are available to us is the right thing to do.
And Robert, can I ask what's your view?
Well, yeah, well, it's similar. I think we're, especially coming out of COVID. COVID has really shown the benefit of being part of the UK, and if we're going to recover quickly post COVID, Scotland being part of the UK is absolutely key, as is support for SMEs. But when you see the Scottish Government, one mention of it in 77 pages, it shows how supportive the Scottish Government is of SMEs. And I have my issues with how supportive the UK Government is. In fact, I was on a call this morning lobbying for that with the Chief Secretary of the Treasury, Stephen Barclay, about the need for, in the upcoming budget, for there to be a lot of support for entrepreneurs in the SME sector. But I love the idea of the bank. I think it's a great idea. Definitely there is a gap in the market, and I wish you all success with that, Jim. And if there's any help that I can give you as you develop and bring that forward, I'd be happy to get involved, as it's right on the money in my view.
Thanks, Robert.
Thank you, Robert. So I'm going to ask Tony Banks to speak, and then I'm going to go over to Ron Lander, and then we're going to do a short poll, and then I'll go to Karen Bryan, and I believe Eunice is on the line, Davin Punawasi, and they're all coming in. So we'll do a quick poll after Ron. So we'll go over to Tony Banks now.
Yeah, hi Jim, how you doing?
I'm good. Tony?
Yeah, I didn't realise we were going to do a party political interview here. So obviously I'm diametrically opposed to Robert Kilgour and Jim's views. However, I do think it's about timing on terms of a referendum. And I do concur with Robert's view on terms of the government help for SMEs over the last few years. And I will criticise the Scottish Government, who I think are totally inept in actually dealing with the SMEs and with business. Business is not important to the current administration and the leadership of that administration. However, I would want to talk about the Challenger Bank is really interesting, because in one breath, Jim, you're saying that you're really interested in artificial intelligence and all that brings, and quite rightly on the other side of the coin, you're saying that there's no relationship management between the banks and the customers anymore, and the business and particularly in the SMEs. But I look at this COVID, the situation with COVID and how it's damaged to the global economy. And my challenge probably, and my question would be around what role do governments have to play in the aiding of this recovery? Because in my 30 years in business, I think that most businesses survive in spite of government, not because of government. But I think this is the one time that a lot of businesses, particularly the smaller SMEs, who have very little capital to call upon, who have no relationships with their banks, and who, with the end of the furlough scheme, are going to have got some very, very dark decisions to make around the workforce. And I think today was, for larger companies, they had to tell the employees about redundancies. So I suppose the question to you, Jim, is what role do you think the government should be playing?
Well, I think they have to have a pretty ambitious industrial policy, or a policy to support private businesses, and I have lobbied in the past. I think there's a neat solution to this that would help the Chancellor And I don't know for the life of me why the UK government don't do it. Every other country in Europe have a national investment bank, and those national investment banks provide guarantees to companies who are applying for large contracts, and they're getting progress payments. But to get those contracts, you have to put up bank guarantees. The banks don't give you the guarantees now. They can't. They count it as core debt. So UK companies can't get support on that level. If you look at Germany, they've got their National Investment Bank, which has, it's funded like others through raising third-party capital, bonds. So it's like a government bond. So it's very cheap money for them. It's operated like a proper bank, but it takes a longer-term view. And there's government money in there as well. It's a government national investment bank, but it's seen as independent. So it's not state aid when they help. You know, we hear stories from people saying, oh, the French cheat, everybody cheats on the state aid. They don't. They've got national investment banks in place that are allowed to support the businesses without it being called state aid. And they can put up guarantees. Now, we've not got a level playing field here. If you look at the amount of bonds that the German government have outstanding to support their bank, it's over €1 trillion. And if you look at Finland, which is the same size as Scotland, I know in 2017, the last numbers I have, they deployed with guarantees and loans to small companies, 2 billion. And, you know, the Scottish government have got a target to get to that in 10 years. And Finland did it 3 years ago in 1 year, you know, lent that sort of money. And I think if the UK government were to turn the British Business Bank, which could be done very easily, into a national investment bank, they would be able to go and raise outside bonds for that bank. It has to be run in a commercial basis, so it makes money for the government. They would raise bonds. They would be able to support businesses. It would avoid state aid, which is a topic that they're discussing in Brexit just now. And, you know, if they don't put something like this in place, they're going to be challenged on, you know, unfair competition. So if they put this in place, they can help businesses without being challenged on state aid. And also, it doesn't become part of your national debt. The €1 trillion that the Germans have is not on the national debt. And if you're supporting a local company, if I'm a construction business that's competing with a French or a German one for a project in the UK, but I'm a UK business, then I'm at a disadvantage because they can get support from their national investment bank that I can't get as a big construction company to support me. And that means that's import substitution. So your balance of payments is improved as well. The British government could do this in a heartbeat. They're 80-90% of the way there with the British Business Bank. A few changes in Parliament, a few bills could change this very quickly and give the Chancellor access to funds. He could raise 100 billion and he could then use that to support businesses. And it's something that could be done very simply. I don't know why they don't look at it. And it's been mentioned to a number of politicians. Maybe it's not getting to the right people, but perhaps Shalini could take it.
Perhaps Robert could take that on his next call. Robert could go on his next call. Government, he can take it to them.
I think Jim, what you've said is very, very insightful. I think it's something we need to look at. I don't think we've discussed this at the Business Action Council, so I'd like to take this forward. Tony, I didn't quite catch what you said, sorry.
I've been flippant. I said Robert Kilgour can take all that Jim said to the UK government on his next call with them. But Yeah, but this is, I know this argument. I've heard this argument many times, and Jim's absolutely 100% right. They could do it in a heartbeat, and this is what I don't understand. You know, we're in a situation where we're needing some radical moves, and it's not even that radical. It's to give a level playing field with our European counterparts.
Sure.
Does it make sense to me why they're not, the UK government are not doing this?
And Shalini, I commissioned a piece of work for London School of Economics on this, and I paid a bit of money for it to compare with other governments around the world. And I've also given that to government ministers who are no longer ministers. So maybe it's gone away. But you know, when Theresa May was the Prime Minister, I did give it to some people, but it never came to anything. And I do think it's such a key point that could give the government access to a lot more money at low cost that would allow them to support businesses, and even that would free up some money that they have, you know, they've lined up to support businesses. It would free it up to go into health and education. So I don't know why they don't do it.
I'm going to take it forward. Would you be kind enough to share that report with me, Robert, or one of your
I'll do that. I'll do that.
I'll plug you into the conversation as well with Business Action Council, which is reporting to Number 10 and to Alok Sharma. So I think it's a fantastic suggestion. It's got a lot of credibility. I'm surprised we haven't discussed it before, and it's the first time 5 months in. So I'll see what I can do. Yeah.
Okay. Good.
Thank you. I'm going to ask Ron. Ron, would you like to say anything? And then we're going to do a quick poll. And then I know Eunice is waiting, Karen is waiting, and Davin, you have a question as well. So Ron, would you like to say anything? Is he there?
Are you on mute, Ron?
Are you there, Ron? Maybe what we can do is do the poll quickly whilst we see whether Ron can go live.
Right. Can you hear me now, Jim?
Oh, yes, we can hear you now.
Sorry about that. I think that's the first time I've ever been muted in my life. Jim, a real pleasure to be participating and to hear what you've got to say. We go back a long way.
Yep.
Tom Hunter, Sir Tom Hunter, who I remember I was giving a lecture in the University of Glasgow in 1985 when Tom, who I think just was a little bit ahead of you in his development at the time, was an unemployed graduate and was on a course where he said that kind enough to say years later that I was the only person that made any sense. Now, I know I didn't have that impact with you, but very seriously, I'm astonished at how far you and indeed Shalini have come in the last few years. It's a pleasure to hear all that you've said and that she has been saying. I go back to a time when I was the UK representative for small firms to the ILO in Geneva, part of the United Nations, and spent over a month there as the small firms representative for the UK. And you know, they wouldn't even talk about entrepreneurship. They only could talk about enterprise. And the change, even though there are the problems that you're speaking of today and others, they are in a sense so different from what we had 15, 20, 25 years ago. So it's wonderful to hear all the great things you're doing. Jim, I genuinely enjoyed listening to your story because obviously I know a lot of it already. And indeed, what many people won't know is that my son, Nick, who also a chartered accountant, worked with Jim for a while. And although Jim wasn't happy to see him go, he did become a multimillionaire in his own right. He is a multimillionaire in his own right. And I think, Jim, you've had an impact and a help there, as I'm sure you have done with a lot of people. And that's great as well. But my question for you tonight is a very simple one. It's simply, with the benefit of all the knowledge and experience that you've now got, what would you do differently if you were starting out again today?
I think it would be around people. You know, I probably have been too patient with people who haven't performed as well, and that's probably meant that it takes longer, you know, to get the results that you're looking for, and in some cases probably destroyed some potentially good opportunities. So I think it would be, you know, people have been saying since I started with Clyde Blowers, you know, it's about the team, and you say it yourself, but I don't think you realise just how important a good team and great people are. One good person makes a huge difference to what you can achieve, and it's not about you as an individual. It's about the quality of the people that you've got around you.
Yeah, I agree.
Absolutely.
My philosophy when I mean, I've been retired now for a number of years, always was try and hire people who are better than you are yourself for the job. Make yourself redundant, but it's not easy.
No.
Ron, thank you. That was a fantastic question. And can I say that it's really nice to be following in your footsteps. So Ron was very heavily involved in the setup of the Entrepreneurial Exchange.
Yep.
And so huge congratulations on, I think you achieved a huge amount with the Entrepreneurial Exchange. It really brought, I mentioned about camaraderie before, and that's what I saw with what you have created. So I feel lucky to have you on this call. So thank you very much, Ron. Great question. Okay, so we're just going to come on to more questions in a second, but if you didn't mind, Jim, we're just going to do a quick poll. And the idea of the poll is we keep evolving E2E and learning more. And it's also to understand your interests and how we can help. So Stephen, would you mind to put the poll up, please? Thank you. So I'm going to read out the questions. And I'm sorry for those of you who've answered it before, but feel free to answer it again if you've had a change of mind on anything. So first question. I'm interested in E2E because the events are informative and educational. I make make valuable, high-quality connections. I make use of the membership benefits, or none of the above. Pick one, and we'll share the results towards the end of the webinar. And you can pick more than one, I believe. The second question: which of the below services would you need the most? Business services like consultations with our legal partners, accountants, etc. Receiving flexi mentoring. We're soon launching E2E Advice as a SaaS service where you can book time with our 100 leaders by the hour for mentoring. Finding a non-exec director, meeting like-minded people, fundraising, offering your services to our members, or none of the above. Third question, there's just one more to go. Which of the following services would benefit you? Real-time private market data, sales intelligence software, digital marketing support, web hosting and development, customer relationship management software, none of the above. And would you benefit from the discounted access to the physical or virtual office packages provided by IWG, either yes or no? So those are the questions. Jim, you and I can't vote. But
no, I tried.
So everyone else can vote, I'm afraid. And please do take a second to vote. And I'm going to go over now, and I'm going to ask if Eunice, you'd like to ask your question, and then I'll move to Karen Bryan, if I may, followed by Davin, followed by Chris Harding. And then I think Ian Reid may have a question as well. So Eunice, are you live?
Yes, hello, good afternoon or good evening.
Nice to have you on.
Thank you for arranging another great get-together of like-minded people. Jim, it's nice to see you again. I met you in Edinburgh around 18 months ago, I think it was, when you were up here. We arranged to have dinner. I sent you a very nice invite. You didn't respond to it, so I hope we can have dinner sometime in future. I've still got your number and WhatsApp, so hopefully we can catch up with each other.
He's a busy man.
After coronavirus, So a couple of points that you mentioned. So the first is relating to your bank. And I 100% agree with you relating to like an export support for businesses. I used to stay in Denmark, and back in the 80s, the government there had this system, but where they secured the kind of revenue for the bank was when they gave the guarantee, it was stipulated in the contract that whoever they were making the deal with, the payment will come into the bank and the government will take its money first before anybody else got its hand on it. So that's the first part. The second is, when you're saying the government should set up another bank, the government and the UK citizens already have a major global bank, which is RBS. Why can't we just set it up with them? And instead of paying more fees for another CEO and so on, and the government, to support small business, is willing to give loans to all the banks at base rate. Why can't small businesses access, in these unprecedented times, the loans at, say, instead of 0.1% at 0.15%? So the Bank of England is still making good money on it, and it's helping some small business.
Well, you know, there is quite a difference between a national investment bank and just a commercial bank like the RBS. They couldn't run RBS the way that national investment banks are run, and they do cover all the issues that you've raised with a national investment bank. Every country, or most countries in Europe, or certainly all the countries like France, Germany, Spain, Italy, even the small ones like Finland, they all have national investment banks, and they can lend at these low rates because they're a bank that's run. It's a government bank, but it's seen as independent because it's got third-party money in there. And they operate on a longer term, more patient capital basis. So it's a different operating model. And that's why I think it's important that the UK government have one. And they do have one. They have the British Business Bank. It's all set up, so it wouldn't cost a lot more money to, it'd be marginal cost to turn that into a national investment bank. In fact, it would be a saving to them because they wouldn't have to put the money in from the government. They'd have to put some government money in, but the rest would come from third party raising bonds in the market. And you know, these are seen as high quality bonds because they're backed by the government, but they're treated as off balance sheet lending, so it doesn't go on the national debt, and they've got much more flexibility than a normal commercial bank.
Okay, thank you very much. Thanks, Eunice. I'm going to share the results of the poll quickly before we go on to the next one. So in terms of number one, which is I'm interested in E2E, it's because of our events and our education. Second is, this is quite different from last time. So which of the following services do you need the most of? And meeting like-minded people scores the highest there. In terms of which of the following services would you benefit from? Obviously, the highest is none of the above. So I'm going to have to write to you and ask you what services you would like. So we need to do some more due diligence around that. Maybe it's banking. And please do write into me to say what services you'd like. We'd really appreciate that. And at the moment, 38% of our audience are looking at office packages, and 63% of you are happy where you are. So those are the results of the poll. So thank you very much to everyone for taking the time to do that. I'm going to move on. If Karen Bryan is available, and followed by Davin, and followed by Ian, and Joe Smith is also asking a question. So we've got quite a few questions. We haven't got a lot of time. We've got 10 minutes. So would you mind to keep the questions brief? And Jim, I'm going to try and get as many of these in as I can.
I'll keep my answers brief.
Thank you very much. Karen, are you live?
Yeah, can you hear me?
Yes, thank you. Hi.
Okay. Hi. Yeah, so I'm an electrical engineer. I work in the energy industry, and I've spent a few years in the oil and gas industry as well. And I'm also the founder of a publishing company that focuses on addressing gender bias in various professions, particularly STEM. So I was just wondering, Jim, with the issues around gender and race diversity in engineering, and specifically in energy, Does any of your investment focus on improving or addressing diversity in the industry?
Yes, all of them do. What we do find, I mean, certainly in the interest we had in a shipyard up until it was stolen from us by the government, we had encouraged on the apprenticeship side young women to join, and indeed we had a good response, but it was still outnumbered by the number of young men. But the ones that did join, were by far the most successful, the most ambitious, and progressed through that organisation pretty quickly. So we've never had any issue with going out and making sure that we're taking the best people, but have put a special effort, I think, into trying to recruit more young women into the industry. But there's still not enough applying for or following these jobs, although it's much better than it was, say, 2 or 3 years ago.
Yeah, it's I think it's improving, but the rate at which it improves isn't that great.
No, there's still a lot of work to do to get a balance.
Mm-hmm. Thank you. Thank you very much, Karen, for your question. It was a very good question. Davin, are you live? And then we'll go to Chris Harding, Ian Reid first after Davin, and then Chris Harding, if I may.
Hi Shalini, thank you for putting on another great event, and hi Jim, lovely to meet you, and thank you both for your fabulous words and wisdom. My question is about almost an addendum to banking, where you've got P2P lending and crowdfunding, which is relatively new in the scheme of things, but still very regulated. And are there ways where this can actually work alongside and in conjunction with banks? Because I think it adds another tool in your finance toolbox for entrepreneurs and adds another source of finance into the system, which then can go back out to small businesses.
Davin?
Yeah, hi.
What was the question?
I think it was a...
So the question is, how do you think that can work? Sorry. Do you think that the peer-to-peer and crowdfunding areas can work well with banks to help entrepreneurial businesses?
But I do think they can, Davin, but I think they're pretty fragmented just now, and it's difficult for companies to identify, just where to go there. I think it's probably there's a bit of development needed in structuring it a bit better for companies, because companies that I talk to, they know the words, but they're not really familiar with who the players are and where they would go and how they would go about it. So perhaps there's a bit more education on that side, and a bit more development needed in those sectors. But I agree with you. I think they would be very, very useful additional sources of funding for companies.
Okay. I would agree actually with what Jim is saying. I think we can be much more joined up. I think that would increase the volume of peer-to-peer lending if it was less fragmented. So maybe with Alba Bank, Jim, this is another thing to put onto the radar.
Exactly. It sounds like there's a perfect partnership where the capabilities of peer-to-peer can work well under the help and direction and structure of a bank.
Yeah.
Thank you. Thanks, Davin. I'm going to move on quickly to Ian Reid, and then Chris Harding, and then Joe Smith. I'm not sure if we'll have much more time after. So, Ian, are you live? Ian, maybe you could. Maybe you're on mute. No. Okay. in which case, let me go straight on to Joe Smith, if I may. Joe, are you there? No? Okay. Fair enough. So maybe I will read you Ian's question whilst we're doing this. So he's written, this is brilliant news. The markets and particularly banks no longer serve industry and the real economy. Where can we find out more and how can we help? Is the question from Ian, Jim.
Well, Shalini, we had a conversation earlier where I'm sending you the, much more information on it, and we're going to have a call on Monday, I believe, or early in the week. So maybe we can discuss how best to get that out there and see how people can help.
Okay, that sounds really good. Thanks, Jim. Chris Harding, are you there? No, I think we have a little bit of a technical difficulty. So let me ask his question, Jim. Chris's question is, what do you make of Jeremy Rifkin's prediction that we are moving towards an internet of energy and every building will ultimately become a smart producer, a user of energy?
No, I think that's absolutely right, and I've had several trips up to Orkney in the past year, and Orkney have a surplus of wind power and have put in an electrolyser to turn that into hydrogen to be stored and reused when needed. But they also have probably the biggest fleet per head of population of electric cars. And most of the houses have their own charging point for electric car. And if the power cuts out in the house, the electric car becomes the source of electricity for the house. If it's plugged into the charging, the whole system can reverse. So they've really got quite advanced in Orkney with the smarter grid management, and I think not many people are aware of what's going on up there, and I think they're going to be where that question has the point that question highlights. I think they're a good part of the way there and will be there pretty soon.
Okay. Thank you, Jim. That's very helpful. Hopefully that's answered the question. And I don't know if Joe is now online. If not, I will read out Joe's question. Joe, are you live?
Hi, can you hear me?
Yes, thank you, Joe.
Okay, hi, Shalini and Jim, and fantastic webinar, really interesting insights. Thanks. So my question is, there is already a Scottish investment bank. So I was wondering, Jim, if your proposed bank could possibly work with that as it's already in existence and maybe enhance what's already there to offer to businesses?
Well, as I said earlier, they're two different animals. This would be a commercial bank, but getting back to really having a relationship with SMEs and responding to their needs. The National Investment Bank is a bank that's quite different. It's longer term, more patient capital. And in Scotland, we do have this new Scottish National Investment Bank. But initially, as I understand it, it's not going to attract outside capital yet. It's just government money going in. So it won't get round the state aid claims. So it'll be limited and restricted, and the amounts of capital that it will have available is pretty low compared to where other countries are, because it's not accessing outside money. And the other area where I think it's going to fall short initially is it's not providing guarantees, and a lot of companies need these bank guarantees, which up until the banking crisis you could get from a bank for a few % charge, because they're not giving you money, they're just guaranteeing that the contract will be performed properly. And if they do their diligence, you know, the failure rate was tiny. It was like an insurance policy, not many claims at all. But after the banking crisis, it has to be treated as core debt, and that just makes it impossible to get bank guarantees for your big contracts. So the Scottish National Investment Bank is not going to provide those initially, and it's not going to access outside capital. So it's not a true national investment bank in the way that other established European countries have them.
Mm-hmm. That's great. Well, all the best with it, Jim. It sounds like a fantastic idea, and hopefully it will benefit us smaller businesses. Thank you.
Thanks.
Thank you very much, Joe. That was a very helpful question. Jim, I think you've got a massive endorsement from the audience today for your bank. And I've got to say, it's 7:15 now. I have to say a massive thank you to you. I've learned a lot in this conversation. The other big thing that I'm taking away with me is tenacity, because what you've shown through all of the different recessions and climates that we've been through is both tenacity and the way that you've been so how do I say it, industrial in the way that you've done things. So thank you for all the support that you're giving to E2E. And I'm sorry it wasn't a dinner live, but it was great to have a larger audience than we might have had over a dinner. And it's nice to have had quite a lot of our friends from Scotland. Also, Dinesh Damija's on the call. He started eBookers, but hasn't been able to speak. We've run out of time. My mother, Dame Asha Kemker, she's on the call. She didn't get time to ask her question, but we've had a great participation, and hopefully you'll be able to see from the Q&A that's going on, there's people saying how brilliant today was. So I'd like to say a huge thank you, Jim, and wish you every success. Looking forward to working with you. And just a couple more things I wanted to say for everybody who's listening. Please do write to us and tell us what would be of help, because we're evolving the business all the time. Next week we have Simon Woodroffe. He founded, as he says, YO. He founded the YO group. The week after we have Dame Inga Beale. She was CEO of Lloyd's of London. She sits on the Mayor's Advisory Board with me. After that we've got John McGlynn and Lawson Moncaster. Just have a look at the events page. They're all virtual events, I'm afraid, for now, but hopefully very informative. It's been great to have you, and hopefully you can go and enjoy some dinner now. So thank you very much. Thanks, everybody. Thanks,
okay,
Jim.
Thank you.
Thank you very much. Thanks, guys. Bye-bye. Bye, Jim. Thank you.